the next 60 minutes. But let's start this discussion with talking about the auto sector and the outlook. Inviting on the show Nishant Arya, the Vice Chairman and Managing Director of JBM Auto, to discuss the company's order pipeline, the EV sector demand, and much more. Nishant, morning, and thanks so much for joining in. First, if you could give us a sense of the festive season, the kind of pre-sales that you've had so far, and how would it compare with last year and, say, even pre-COVID?
I think this is an opportune time where people are really understanding the need for electric vehicles and how different companies and the government is committing to ESG, and how in case of smart cities, they are looking for world-class products which are zero emission. And today EV is the best technology for committing to zero emissions. So the perspective is very clear that the private sector, airports, schools, for all different applications, and even the end consumer who's using public transportation is looking at EV in a very big way. And EV is not something which is new to them, and slowly it is going to become way of life as we go along, especially in the public transport space, which is meant for the common man, because 90% of our country uses that today for different modes of transportation.
So can you tell us what the EV order book number is at right now? Because, I mean, last quarter we saw it slow to around 90 crores from this, over 300 that we had before that. So can you tell us what that figure stands at now, and also what is the contribution of just the EV segment?
No, so about 500 to 1,000 buses is what we have in our pipeline with EV and CNG buses. And definitely always it happens that the second half of the financial year contributes more significantly, as you would have seen in the last year as well, to electric vehicle sales, because in the first half of the year, most of the customers create their demand and requirements, and in the second half they get it, unless and until they have done it in the last quarter of the previous year. So that's why we see a better growth pattern in the second half of the year. But nonetheless, this year we are seeing a very strong outlook from the private sector, from airports. So we have been working with customers like Indigo and Celebi, amongst many others, for airports, many Fortune 500 private customers who are really giving us a good momentum. And we are clearly seeing that they are having a long roadmap. How are they becoming carbon neutral? And we are delivering vehicles in multiple states. In Maharashtra, we have bagged our orders recently from Navi Mumbai, and we're working with different private customers also. We are delivering vehicles in Goa for multiple customers, in Gujarat, in Delhi NCR region. So, and we are definitely seeing that as every state has come out with its EV policies, a lot of new tenders and new projects are in the pipeline, which should get fructified in the next couple of months.
What percentage of your order book currently caters to the private sector? Any number? And are the margins higher?
No, definitely we are having standard margins in both the cases, but we are catering to private sector, which would be about 20-25% of the order book today. And I personally see in the next couple of years, this should go to 50% or more.
Nishant, you were just talking about the order book, which, looks quite healthy. But what we saw in Q1 is that in spite of you getting a lot of orders, the top line really is not growing, and it's been absolutely flat. So can you tell us why this is not translating into a revenue growth, and what is the kind of figure that you're penciling in for the full year?
So, as I said, that first half of the year is always subdued compared to the second half of the year, and that has been consistent in the last few years as well. And clearly, the kind of transition time required is higher in case of electric vehicles because of semiconductor requirements. Even though the semiconductor challenges have eased out a bit, and the availability has become better, but I think the way things are moving on logistics, also things will improve in the next couple of months, and we will see healthier quarters in Q2, Q3, and Q4. And this year, we would be looking at least 30 to 40% growth over last year. So last year, the bus business did about 700 crores of top line. And this year, we would be looking close to 1,000 crores or more.
30 to 40% growth in the buses division. Can you tell us about the tenders which are currently open, from which state and the size?
So actually, we are under NDA with our customers. When the tenders are open, that's why I've shared with you the orders which we have bagged and customers which we are working with in the states where we are operating. But definitely, as they get fructified, we'll be sharing with you in the next couple of months.
Okay, Nishant, one segment that really stood out in Q1 was the components division. It saw some 85% growth. Do you think that kind of growth rate can sustain?
Yes, so components division is doing very well because we see the passenger vehicle market has bounced back quite significantly, and the commercial vehicle market is also doing pretty well. And even in the farm equipment space, the growth is fantastic. So I think a combination of all three is giving it that kind of momentum. And I personally see that on an annual basis, we would be looking at least 50% growth on a YOY basis, if not more.
We've seen commodity prices come down reasonably in the last few months. Is there still a differential between what you're able to command by way of pricing and the raw material? Earlier, there was a gap. Companies were unable to pass on the entire burden of raw material increase. What does it stand at right now? What's the picture?
No, so definitely the gap has reduced substantially, but I would say still about 15 to 20% gap exists from where we were at a standard level prior to the commodity prices going up in last 1.5 years. So I believe that we should be able to get there maybe by the end of this financial year.
Okay, Nishant, we'll leave it at that. Thank you very much for joining in. That's JBM Auto for you. But another big mover today has been the rupee. It's another record low for the rupee. It's opened below that 82 mark against the dollar, 82.2. Lata is here to tell us more about the factors impacting the currency.
Well, no surprises that the rupee is under pressure. It's a double whammy. We have seen both crude prices and the dollar strength pressuring. It usually doesn't move together. When the dollar strengthens, commodities weaken a bit, but crude is rising for its own reasons because of output cuts announced by OPEC+. And that's, a good 9%. If you looked at the October 2nd, last week levels, it was ruling at about 86 and change, and now at 94.20 thereabouts per dollars per barrel. The rise is substantial. The other set of people who are buying are those who probably went short dollar, anticipating that India will get included in the bond index and there will be dollar inflows. So those short dollar positions are also getting covered now that that inclusion is not coming. The big buyers, dealers tell us over the past 2 days have been oil companies. The Reserve Bank is supplying dollars, but it is not trying to move the exchange rate. It's apparently looking like supplying only where the demand is, or at the level the demand is. Actually, the Reserve Bank would be happy with a gentle depreciation of the currency because the trade deficit, especially with China, is pretty wide. And the Indian rupee has appreciated versus the yuan. So a depreciation would be welcome. What the Reserve Bank fears more is depreciation anticipation, not depreciation itself. Dealers are talking about 80 to 50 as possibly the next level where a defense may come, and 83. But these are just wild guesses, There's always that expectation in round numbers like 82.5 or 83, where they expect the Reserve Bank will come and support. Just a word on the bonds. The yields have gone up. They've been going up continuously for the past 2 or 3 days. Again, for the same reasons, anticipation of bond index inclusion not coming through. I mean, now it is confirmed. The dollar index, crude prices moving up. And finally, US yields also moving up. So everything is pointing to higher yields. 7.5 is higher than the highest point in September. The chances are that it can even go to 7.62, the 10-year yield, which was the highest we saw in June.
Lata, just a quick point. Do we know on a weekly basis how much is the RBI spending in terms of dollars? Or
no, that is very difficult. What we get is only the RBI's full reserves position every Friday, which comes with a lag of 1 Friday. So we know the change in the reserves position, but as the governor very clearly said, a part of the reserves are invested in US treasuries. So when that price falls, also there is a mark-to-market loss. And the dollar reserves, the reserves are not entirely dollars. They're denominated in dollars. One guesses about 40% is in pound euro. So all those mark-to-market losses are also
reflected in the actual.
Yeah, so if you say, oh, over 1 year, we went from 640 billion to 540 billion, he says 67% was mark-to-market losses.
Oh, wow. So that is a big number.
Yeah,
Well, majority number is M2M and not actual dollar sales into the market. Lata, thanks very much for that. Well, let's just take a quick look at the market once again before we take a break. 65 lower now. 17,268 is where we're at. Again, it's neither here nor there, holding. We'll take that break. First on the program, we are back with commodities with Manisha on the other side.